Hey guys, and welcome back to another video here on the Fifth Dimensional Trading YouTube channel. So before we get started, I just want to say I haven't uploaded in a few months due to being extremely busy with just creating my courses and stuff, and I've made a new day trading system. So if you want to learn that, join the course, as I won't be giving that away for free. And on this video, we're going to be covering market structure again. I have got a video or two already up on the YouTube for free on market structure, but this video is going to be more in depth and it's going to be covering it multidimensionally, okay, which is what I've wanted to do for a while now. I wanted to make a video on this. So I know a lot of people struggle with the multidimensionality of market structure. Now, you may not know what I mean, but I will break it down entirely and explain it in depth. This video is probably going to be a little bit longer than my usual videos, as there's a lot to cover, and yeah, I hope you guys enjoy. So if you have any questions, as always, just drop a comment or message me on my Instagram, which is just the same name as the YouTube, 5D Trading. And yeah, so before we get started, we must understand that the market is a fractal market and is multi-dimensional. So if you don't know what a fractal market is, I already have a video uploaded on the YouTube for free, so go back and watch that and then come back to this video. And of course, if you haven't already watched the other videos, watch them too, as they are very good, and they explain quite a lot of things that I'm going to be going through in this video. So yeah, let's get started. So if we just start here and I draw something out using the path tool, just to explain a few things that we're going to be going through and breaking down. So if I just do this, quite simple, just mark out some higher highs and higher lows. We all know that is bullish structure, right? Price is coming down, respecting the demand zones and breaking through the supply zones, right? We know that is bullish structure, bullish order flow. Okay, each one of these points here are higher highs, and each one of these points here are higher lows, right? Now, when price goes up like this and pulls back and then goes up, creates a new high and then pulls back, we're not just going to see bullish candles all the way up and then bearish candles all the way down, bullish candles all the way up, bearish all the way down. Of course, we're going to have something that is quite similar to this, right? Okay, let me just bear with me here. Let me just do one more, break that high. So just like here, when we have breaks of structure to the upside, okay, we are also having our break of structures to the upside here in the exact same way. The difference being, this is what you are most likely going to see in the live charts. And of course, this has internal and external structure, whereas this is just external structure. So these points here are all the external structures, and then inside these legs, right, will be looking like this, okay, which is the internal structure. So if you didn't already know, the way I mark out swing highs and swing lows is I mark them out as the external structure. So for example, let me show you. I wouldn't mark out every high and low as a swing point because that is internal structure, right? And we use swing points to determine whether the market is bullish or bearish. So for example, once this swing high gets broken here, we know the market is bullish, and we're going to be looking for buys out of one of these demands, okay? Price comes into the demand, we're buying. Where we target him, we're going to use our stop loss like that, and we're going to target this high here. Why this high? because this swing high got broken, this swing low got respected, and now we're expecting the same thing to play out, right? We're expecting this high to get broken as well, and that is where we will set our take profit. Okay, the reason why we don't use the internal structure points for our swing points is, like I said, we need to determine whether the market is bullish or bearish, and internal structure gets broken over and over again many times in both directions. Okay, when price is going up to put in the new external swing high, it's having breaks of structure to the upside. All right, just mark this up for you. And then when it is pulling back, okay, because price always has to pull back before continuing up, or pull back before continuing down if it's bearish, but in this example it's bullish, so price has to pull back down before continuing up and breaking the external swing high again. Why? Because there is always going to be order blocks left behind where price needs to come back down to mitigate them orders and tag the orders in, and also there will be imbalance as well where price has to come back and fill in that fair value gap. Okay, so external swing points, right? Let me just mark them up again: high, low, high, low, high. Okay, now if we was to mark up the internal structure as our swing points, when this swing low got broken there, when this internal low got broken there, you would have been looking to sell, right? And you probably would have been targeting this swing low all the way down here, this external low. Okay, you wouldn't have got that. You would have got real close, and then it would have come back and stopped you out if you didn't already, and it would have gave you a loss if you didn't already move your stop loss to break even, which is something else I teach in the course. So you need to be aware of the actual external swing points, which I've explained. You would have known that it would have been bullish. It wouldn't have mattered about this swing low getting broken, this internal low getting broken, because it's not a real swing point, right? I hope you are like understanding what I'm saying. Like I always say, go back, watch my other videos, or drop a comment, message me on Instagram. I'm more likely to reply on Instagram than I am on YouTube, but you can still drop a comment. I'm sure I'll still reply. Might just take me a little bit longer. But that's the first thing I wanted to go over, okay? That's the first thing I wanted to go over. Now let me delete all of these green bits that I've drawn all over the place, because it's a bit messy. So there's something else to this that I want to explain to you guys, okay? Almost there. Just bear with me. Sorry about this. Shouldn't have drawn so much. Right. So we now know, and I hope you guys know and are aware and up to date with what I'm saying. These points are the external highs and lows. Okay. These points are the internal highs and lows. Now let's say that this price action was on the 4-hour time frame. Okay, that would mean these highs and lows are internal structure on the 4-hour time frame, and these highs and lows are external structure on the 4-hour time frame. If we was to go up to the daily time frame, or maybe even the weekly time frame, we would see that these 4-hour external swing highs and swing lows are actually internal structure on the higher time frames, okay, which is very interesting and something that you can use to your advantage very well. Okay, we'll give you the upper hand on other traders because not many people know about this. They don't take the multidimensionality of the market into account, and they just focus strictly on 1 or 2 time frames and don't understand the overall nature and what is going on overall throughout the market, throughout all the time frames. Okay. Now I'm going to be jumping into the live charts and showing you this, showing you examples of this. But for now, I just want to show you here. So imagine we have, let me delete this now actually. And this. So imagine we have bearish structure and bearish order flow. Okay. Just like this. Right. Of course, we have our lower lows and our lower highs. We're just going to say and assume that this is the external structure and the internal structure is in here. Okay, I'm not going to draw that out because it will look too messy and take up too much time. I'm sure you guys know what I'm saying. So we have our internal in here in each of these legs. Okay, these points is the external structure, and we're just going to say this is on the 4-hour time frame. Okay, now price comes up, right? Then it comes down, respecting this demand. Okay, it then comes up again, breaking this high. Okay, signaling bullish structure. All right. Now, these are also external points. It looks a bit smaller compared to these, but however, let's make them a bit bigger. But however, they are external points. Okay, and the internal structure is still in here in the legs. All right. Now, of course, what typical people would do, and it's wrong doing this. It's completely fine to do this. You can still get good trades from it, but typically people would be looking for buys. As soon as this high here got broken, they'd be looking for buys somewhere within this leg to then possibly take out the high here. Okay. The problem with this is price truly isn't bullish. Okay, because of the higher time frames on the daily. So let's say the daily swing high, the most recent 4-hour swing high from this low is here, right? Now let's say the daily swing high is this here. Okay, that's the daily swing high. Now we would need that daily swing high broken for price to be truly bullish on the 4-hour time frame. Okay, up until that gets broken there, overall the order flow is still bearish. Okay. This can get a bit confusing, but I'm going to try my best to keep it simple and to explain it the best as I can. What you would need to do is use your Fibonacci tool. Okay, so let me just draw out this some more. Hold on. So let's just say like that. Okay, we broke the overall leg low, right? This is all external structure. We broke that low there. So once that overall low got broken, okay, we obviously are expecting a bit of a pullback, right? Even with the external structure, okay, it's just the same as the internal structure. So we would then, once this gets broken and price pulls back, breaking a high, signaling what would appear to be bullish structure, right? We would then need to pull out our fib from the overall high right up here. This could have been months and months ago, okay? But you want to pull out your fib right from the high here, pull it all the way down to the most recent low, which is this, the lowest low, okay? And then you would want to mark out any daily supply zones that are above the 50%, okay? The reason why is because after a lot of time testing, we know that price likes to pull back above 50% with bearish structure. With bullish structure, it likes to pull back below 50%, okay? This is what is called premium and discount pricing, okay? Now, you may find videos out there for free on this. However, if you want a very good in-depth explanation and lessons on this, then again, you want to join my course. Okay, it's still very cheap, only 50 Great British pounds, which is extremely cheap for the content that I have in the course. Some people I know have very similar content and they charge upwards from £200 all the way up to like £500, £600 and even more than that with some people. So with the price I charge, you won't find any other content that's on the level for a similar price. Okay, so you might want to join my course, and you'll join the Discord and everything when you buy it. So it'll be great to communicate and talk with like-minded people that can help you on your journey. And so price likes to pull back above the 50%, alright? So we can expect this and then this. Okay? Pull back, taps into a supply zone above the 50%, that's within premium pricing, reacts to it, and then comes all the way down, taking out the liquidity and taking out the low all the way down here. Okay? Now, this may have confused you a bit. I'm going to jump into a live chart now and show you a few examples. So we're on GU. Okay. And I'm going to delete this for now. And okay, so if we just look here, for example, right, let's mark up our swing highs and swing lows first of all. Okay, we have this, then we have this, then we have this, 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 and I think there's a couple more. Well, there's still quite a few more, but where's the next one? This, this, another low there, another high there, and where else? One all the way down here. Right. Then this, 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 and this. And then finally we have this one. Okay? Now, as you can see, price is pulling back to put in a new higher low. Okay? Now, when price dropped down to here, it was obviously going to pull back from the amount of liquidity, unmitigated supply zones and imbalance that was left behind. Okay? So, when it was pulling back, we was obviously looking for sells out of somewhere around here. Okay? Maybe he was looking for sells out of this extreme order block all the way up here. Right? Or maybe he was just looking for sells out of this order block right here. Okay? If you was looking for sells out of one of these order blocks, you would have got stopped out. And then you probably would have been looking for sells out of a more extreme zone, like this one up here. However, you would not be looking for buys yet. So say when this high got broke here, you wouldn't be looking for buys yet because this swing high here is still valid, right? It was only when this swing high here got broke that you would be looking for buys, alright? So once this high here got broken, we know now that we are looking for buys, okay? Because this high is the high that put in the lowest low, alright? Obviously, this is the lowest low because it's lower than any of these lows here, okay? And any of the lows here. So, That high needed to be broken. It got broken. Then we was able to look for some buys. Maybe you could have got a buy out of this order block right there. Boom, targeting that high. That would have been nice. But you wouldn't be looking to target anywhere too high with your take profits, because price overall is still bearish. All right. Now you may be wondering, why is it and how is it still bearish when we have clear bullish structure and order flow? All right. We're breaking all of these highs. Okay, so we're obviously expecting this high here to get broken as well, right? And that is correct. However, like I said, the multidimensionality of the market. Okay, so we're on the 4-hour time frame. If we jump up to the daily time frame, right, what can we see when we zoom out? If we zoom in, it's not too obvious, right? It still looks pretty much very similar to the 4-hour. We have bearish structure, and now it's flipped to bullish structure. Okay, but it has to be going somewhere. All right, it's not just going to just go up and go up and go up and go up and take out all the highs and just go up all the way up here, because when you zoom out on the daily time frame, you clearly see that the order flow is still bearish overall. Okay, so if we do the same thing again, mark up our swing highs and swing lows, we have a swing low here back from 2016, then we have a swing high here from 2018, then we have a swing low here that is lower than that low, right? And then we have a swing high here that is lower than that high. Okay, we now have just created a new swing low on the daily time frame, breaking this low here. Now what happens when we break these swing lows? Price pulls back, right? We break that low and then price pulls back before continuing the bearish order flow and breaking the low again, putting in a new low, and then of course it's going to pull back again before continuing down again and breaking that low again. Okay, so that is just what we're expecting. It's very simple once you understand it. Okay, so where can price pull back to? What did I say at the start of the video when we was going through drawing using the path tool? I said it pulls back to premium supply zones, right? It pulls back above 50% of the leg. Now what is the price leg? The price leg is this here, from this swing high down to this swing low. That is the price leg. Okay, so what you want to do is you want to pull out your fib, and you want to be very precise with it, because you want to know exactly where your zones are. So I'm going to zoom in a sec. I'm going to make sure I'm right at the top, which is that. So if we zoom in even more, actually, just to get an even clearer view, we can see that this isn't the swing high. It looked like it from when we were zooming out, but this is actually the swing high here. So let me just do that so when we zoom out we can see it. And we want to use our fib, okay, this tool here, fib retracement. And we want to use it right on the top like that, and then we want to pull it down all the way to the lowest low that is after this highest high. So what is the lowest low after this highest high? We've already marked it out. It's this low down here. Okay, so let's delete that and pull this out all the way down to the low, and let's zoom in so we know exactly where the low is, and we can be very precise with it. Right there, perfect. As you can see, it's touching the line. Right, now we know exactly where the halfway point is of this price leg. It is right here on this 50%. Okay, as we can see, price has not yet pulled back to the 50%, which it always does. All right, this happens internally and externally. Okay, if we drop down to the 4-hour again, we can see what happens when price breaks a swing high or a swing low. Let's use the lows first, for example. What happened when this low here got broken and created a new low? price pulled back, right? Where did it pull back to? It pulled back above the 50% of the leg. The 50% here, it pulled all the way back, going above 79%, probably around 80 to 83%, right? Again, what happened here? Price came down, breaking this low, creating a new low, and then it pulled back. Where did it pull back to? Above the 50%. Okay? Again, this is just repeating itself, guys, okay? This is the low. Price came down, breaking that low, creating a new low. Price then pulled back. Where did it pull back to? Above the 50% once again. Okay? Then it flips to bullish structure, right? We break internal lows. It's looking good. It's looking like it's still staying bearish. And then it flips and breaks this swing high. Okay? When price breaks that swing high, it puts in a new high. And then it pulls back before continuing up again. When it pulls back, where does it pull back to? It pulls back below the 50%, right? 50% there, pulls back below it, okay? Because obviously with bullish structure, it pulls back below the 50%. With bearish structure, it pulls back above the 50%, okay? I don't want to confuse you too much with that. It explains it. I explain that on itself in other videos on the channel, so go back and watch them if you don't understand the simple things of structure. All right, this is very complicated and in depth. This is for more advanced traders that don't yet understand the multidimensionality of the market and price action and structure, etc. Okay, so let's go back to the daily and let's do the same thing. Price pulls down, comes down, breaks the low. Then what does it do? Pulls back above the 50%, right? So now what are we expecting? And let me just show you one more example. Swing low, swing high, right? Well, actually, and that would be another swing low and swing high. So price comes down, breaks this low, creates a new low, pulls back, creating a new high. Where does it pull back to? Pulls back above the 50%. Don't know what happened there. Didn't let me use my fib. And yeah, pulls back just above the 50% this time. Only just, but still, it pulls back above the 50%, alright? And then there, price comes down, creates a new low, pulls back, creating a new high. Where does it pull back to? It pulls back above the 50%, straight to the 79% this time, okay? So that's how simple it is, guys, alright? So now that the 4-hour time frame is appearing bullish, but we have came to the daily and we understand the overall structure, the overall order flow is still bearish, alright? So now we need to identify where the price could possibly pull back to before having a reaction and continuing the bearish intention of the banks, alright? To then take out this low all the way down here. So where could it pull back to? So we need to find supply zones that are above this 50%, alright? So straight away, the first supply zone is right here. Okay, just like that. We're gonna mark that up, and we're gonna pull it along, and then we're just gonna leave it there and wait for price to enter it. Once price enters it, what would we need to see? If you've watched my other videos, you may know, and if you're from the course, you will definitely know. We will need to see a reaction that breaks an internal low that put us into the zone. So say here, this is the internal low that put us into the zone. So we would need to see that broken, okay? And we would need to see it broken as a reaction from the zone, okay? Then we can look for sells to then just target another swing low, another internal low, sorry. And then we should see a continuation of the bearish structure and bearish order flow, okay? Now let's find some more zones, because of course price may not just react to that first zone. It probably will break through it and come to a more extreme zone, just like it has within these examples. It breaks through these first zones and comes up to a more higher one. It breaks through all the zones within here, and then it comes all the way up to this zone here. Let's mark it up. Comes all the way up to this zone here, right? It taps into it first, comes down, and it does not break this internal low that put in the high. Why is this the internal low that put in the high and not this or this? Because this is the low after the high that was before this high, okay? This here is not a high, all right? If we get our path tool out, we can go high, low, high, low, high, low, high, low, high. Well, let me just move that to there, to there, to there, to there, and then finally there. Okay, and then when it came down, it did not break that. Alright, so we weren't looking for cells yet. It came like this. Right? And then it came back up, and then it broke the low here. Well, in this example it would be here, because that there is a low, whereas this one wasn't a low. This one is a low. As you can see, we have a clear pullback before coming up into the zone deeper, sweeping this high, and then we come down, putting in this low that breaks that low. From there, we can start looking for cells and ride the structure and the order flow all the way down to breaking this external swing low on the daily. Of course, you'd be trading on the lower time frames, but you'd be knowing that this low would be getting broken. All right. I hope you're all with me so far. I hope I'm not confusing you. It can get a little bit confusing, but once you understand structure and the basics of structure, and then understand fractal markets, so go back and watch that video, then you should really be able to get a grips of this and understand it very well. Okay, now let's go through and mark out more supply zones. So above this one, we have this. Okay, above that, we have this. I'm not marking these up brilliantly. I'm not marking them up exactly how I would, and that's simply because, you know, there's only so much I can give away for free, right? I can't give away everything. Like this is a gem right here. You aren't gonna find, you probably aren't gonna find many other videos out there that talks about this kind of stuff, right? The multidimensionality of structure, all right. And we have that extreme up there. Why aren't we gonna use something like this? Because it's already mitigated. As you can see, price came back and mitigated this zone already. So that's an invalid zone for me, all right? Again, join the course if you don't know what mitigation is, if you don't know what valid zones are, okay? That's the only way I can pull it. Join the course. There's so much value in my course, and you will learn a lot, okay? So these are the zones that I can pretty much see. There's maybe another couple in here somewhere that I haven't that hasn't caught my eye, and that's because I'm just skimming through it, making the video. I'm not really going in depth and looking for a trade right now, so it's probably is a couple of us, but they're the 4 zones I've picked for the video. Alright, now what we could expect is either, like I've said, a reaction from this, breaking the internal low that put in the high, that put us into the zone, and then we will look for sales to target this low. But just like how price came all the way up to this extreme supply zone, right, we could possibly expect price again to come all the way up to this extreme supply zone before then going down and breaking this low. Now, when will we really be looking for buys for like long term, for like years, and when will the market really go bullish? It would have to have this high all the way up here broken, okay? Because this is the overall daily, or probably be better on the weekly, but I'm not going into that right now. That'll probably confuse you a lot too much. But this is the overall high, okay? This is the high that broke this low. This is the high that put in this low, Okay, so this is the protected high. If this high got broken, then we possibly could see price come all the way up here. Ignore this. This is just from my back testing. We could potentially see price come all the way back up here, but I don't think that's going to happen personally. I am still looking for sells. I'm still very bearish on GU, and I'm just expecting price to pull back above the 50% and then continue down and break this low here. Okay, obviously that could take a while, right? That could take another year or so. As we can see, this high here is from May 2021, and then this low is September 2022. So it took about like a year and a half to get from that high to this low. Okay, so it's going to be a while. So in the meantime, of course, we are looking for. Sorry about that, guys. My mic cut out. But at the moment, we are looking for buys, but only up until these zones are met. Okay, so for example, right now, let's jump down to the 4 hour. Right now, as you can see, we're pulling back. We broke this high, right? With that high being broken, we need to find a demand zone that broke it, which, would most likely be like this demand zone here. Okay, so we can expect price to come down into this demand, and then we could buy from there. And where we'd be looking to take up the high here, of course, but overall we'd be looking to maybe target this supply zone here. Okay, reason being is because it's above the 50% and it's the first daily supply above the 50%, so we know price is definitely coming here. All right, then if we react to that and we get bearish signals from this zone, then we'll be looking for sells again. But if this gets broken through, then we'll be looking for more buys, this time up till the next zone. Okay, and then again, if this zone gets broken, we'll be looking for buys up to the next zone. But if this zone gets respected, we'll be looking for sells. Okay, so that pretty much brings me to the end of this. And then there's one other thing I want to cover, and that is the different scenarios of price action. Okay, so we have, first off, we have price expansion, and then we have price retracement, and then finally we have what I call price consolidation, which is very simple. Of course, I'm sure most of you know what consolidation is. Consolidation is just, for example, this here, price is consolidating, right? So what would price expansion be and what would price retracement be? You probably know. It's pretty self-explanatory. It's not exactly hard. Okay, let me just remove that. I don't know why I pulled that up. It's not exactly hard to know what it is. Okay, but I do know quite a few of you are beginner traders and you probably have never heard of this before. So price expansion is, let me come and draw it. It's just a bit easier when I'm drawing. So say we have a bullish market. The price expansion would be this. Okay, whenever price is going back up, that is expanding because it's bullish. So if it was bearish, whenever it goes down, that's expanding. Okay, price retracement is when it's pulling back. So in bearish, it will be coming down. That's retracement. Okay, I mean in bullish, it will be coming down. That's retracement. In bearish structure, it will be coming back up because it's retracing. Right? It expands, retraces, expands, retraces, expands, retraces. Here, it expands, retraces, expands, retraces, expands, retraces, expands. Okay? What is important about this? It's important because you need to identify what scenario the price action is in, the structure is in. What part of structure is price currently at? Is it expanding, or is it retracing, or is it consolidating, etc.? The reason why this is important again is because you need to know where the market's at, you need to know what's going on, and if you identify this, then you can go ahead and get ready to set up trades. Okay, so for example, if you see price coming back and it starts to retrace, then you know to look for some demand zones to buy from, to get ready to buy from. Okay, how would you know that it starts to retrace? Again, you use the internal external structures. All right, so these are the external points. The internal points are like this. Okay, now how would you know that it's retracing and not expanding? Because here it's clearly expanding, right? The moment you know is when the most recent internal low gets broken. So this is the internal low that put in this highest high. Okay, so the moment that internal low gets broken is the moment that you know price is retracing to a demand zone. Okay, once it retraces to a demand zone, you can either go ahead and place an aggressive entry on that demand zone and target a high, or you can wait for price to start its expansion again. How would you know it started its expansion again? Is you would wait for the most recent internal high that put in the lowest low to get broken. So, for example, like that. That is when you would then be looking to place a confirmation entry instead of an aggressive buy. You'd be looking for a confirmation buy. Okay, this internal high gets broken. You'd be looking for the demand that caused that break being around here. Say it's here, right? Price comes and taps into it, and you buy from this zone, targeting one of these internal highs, or maybe even that external swing high up there. Okay, and that's all there is to say really about that bit of structure, because it's pretty self-explanatory. It's pretty easy to understand, and I do explain that in other videos, such as market structure video, fractal breakdown video, and another good video for you to go ahead and watch is the price cycle video. Okay, which again is consolidation, expansion, retracement. Okay, because what price likes to do, I've noticed, when it in a bullish scenario like this, when it pulls back, once it completes its retracement, it sorts of consolidates a little bit, and then it expands. Then it retraces, consolidates a little bit, and then expands. Okay, and that is the price cycle pretty much. The price cycle is the consolidation, the expansion, the retracement, and then the reversal, continuing on with the trend. Okay, so with all of that said, it brings me to the end of the video, guys. Okay, it's a bit longer than my previous videos. This is on for, so far we're at 43 minutes, so it's a bit longer than my other videos, but it's well in depth and it explains a lot, and I wanted to make this video and go over it. Of course, this video I already explained this very well in my course, but I'll be uploading this video to my course as well, just for extra content, and it's going on the YouTube for free. So if you're on the YouTube and you see this video and you enjoy it, drop a comment, drop a like, subscribe for more, and if you're interested in the course, message me on Instagram, 5D Trading. I'm very active on there. I post quite a lot, and yeah, with all of that said, it brings me to the end. Thank you for watching. Like I said, drop a like, drop a comment, subscribe for more, and I'll catch you guys in the next video. Peace out. Much love.